Hi, this is globalinvestorradio.com with the second episode of Investigate the World. Most of these charts were put together on the 13th, which was yesterday around 11 o'clock in the morning New York time, and I've just got round to recording the screencast today. Once again, thanks to barchart.com for supplying the charts. And also I do get some charts off Yahoo as well. FTSE 100 5-year, you can see quite clearly here where the mouse is that it's broken out of a long-term triangle, like a flat top triangle on the weekly, and it's broken up and it's been in an uptrend really since the beginning of 2013. Perhaps we're seeing a little bit of top action here, and we'll see it come back down to around the 6,000 level, or we could see it spike a little bit higher from here. I wouldn't be trading the indexes or derivatives futures. I just don't really have an opinion on what's going to happen to the FTSE, and it's not an opinion that I could have any confidence in to trade, but it does look like it's going to move higher from here. Just showing you what the FTSE looks like on the monthly chart. Big downtrend broken, nice consolidation action and a break up out of the consolidation area here. Big spike up in 2013. From here we could see it move slightly higher, but again, like I was saying on the weekly 5-year, I wouldn't be surprised to see perhaps it consolidate between 6,000 and 6,800 even for the next couple of years. Who knows? It's just a wild guess at the moment, and at the moment as I said, I wouldn't be trading any FTSE futures. S&P, CNX, Nifty for our Indian brothers and sisters. Nice consolidation action and base action, and then took off about the same time as the Shanghai index in China. And we can see here, even though the Indian economy's been suffering the last couple of years, generally their bigger companies have remained quite strong, but this action here does look to be a top area. And I wouldn't be buying into the derivative futures of this particular market, going long or short at the moment. It's too unconclusive, but it does look like distribution, and we could see this market come down to the average, long-term average, that is somewhere around the 4,500 level. Vodafone Group, listed on the London Stock Exchange, big double bottoms here in 2002 and 2008. And then it slowly, steadily moved higher in a gradual uptrend, nice consolidation. Although I would say I don't like these spikes down and spikes up, but it has broken out of the consolidation area. And if it can stay above the 200 mark, I do see this market moving much higher from here. It's been in the news a lot recently as well about recalibrating their businesses, perhaps selling off some of their non-core businesses as well. So there is a lot of value in Vodafone somewhere, and it does look like, if you are someone who likes blue chip stocks or stocks that have been around for a long time and that are quite steady, this looks to be quite a good move. But again, you could be frustrated here, and it may not take off straight away, but it is one for the future and it's worth checking out. BlackBerry, which I've spelt wrong up there, which I thought I corrected. Never mind, sorry about that. Here we go, downtrend, broken, gradual downtrend broken, and then here it's still in a consolidation, in a sideways basing movement, and I would suspect it's going to take time. Whoever buys BlackBerry, I'm sure there's a lot of value there, and patents have become exceedingly valuable in the last couple of years. So I'm sure there is value, and whoever buys it probably will sort out the business at some time. It is a bit of a gamble buying in at these levels, but as you can see, the curvature is nice, and I do suspect sometime in the next couple of years BlackBerry will be a lot higher than it is now. But again, it's a bit of a gamble buying in at these levels. I would probably wait for me to take a look at the position till it consolidates a little bit more around the $15-16 mark, perhaps looking like a long-term flat top consolidation area, and then once it breaks out of 20, it will be a good buy, and I'm sure the move will last for a couple of years if indeed it does break out of the $20 mark. There you go, I spelt BlackBerry correctly there. You can see here, the downward area. Again, it needs to accumulate. Look at the accumulation, base action back in 2002, 2003, a huge rise up, and this is what comes out of good solid foundations, good movements that carry on for a good number of years. So again, if you draw a line here where my mouse is, the trend line going down, it hasn't broken that. Again, I'd be waiting and holding. If I did have BlackBerry shares, if you didn't have that much to trade with, I would look to sell them and then perhaps rebuy back into the market, maybe in 6 months or a year's time. But if you do have a lot of discretionary funds, it's probably quite a good share to hold if you're not too worried about a quick turn. I just wanted to show you the Apple 10-year, the complete difference. If you'd have put $10,000 in Apple back in 2004 compared to putting $10,000 in BlackBerry, and you can see from the chart actions of the different companies that you really need to decide when to sell. With Apple, with the Great Recession, it wasn't time to sell. You had nice accumulation and base action, where with BlackBerry it was a lot more volatile, a lot more wider swings, and you could tell the market was going to go lower. So where my mouse is here, this is the kind of difference that can, this is the type of stock that you can see that can make a big difference to your portfolio if you can get it right. And Apple was a good trade, and again, it looks to have reached a plateau, and I wouldn't be surprised to see it move back up to the 700 level. I see that Carl Icahn today has bought about $1 billion worth of shares. I didn't know this yesterday when I was putting together this particular stock, but I could see it going up to 650, 700, then coming back down again, and perhaps a repeat of what Microsoft has done in the last 10 or 15 years, between 700 and 400, and it just consolidates with some wild swings. So perhaps we're in for that in the future for Apple. I saw this on the internet. I thought it was quite an interesting comment, worth pondering on a little bit, about the changes to the Federal Reserve Chairman from Paul Volcker to Alan Greenspan to Bernanke. Sooner or later, within a year of the change, there does seem to be big upheavals in the market, so that's worth bearing in mind for when Bernanke does leave the market. And also the Dow being in its 4th or 5th stage on the bull market that began in March 2009, the timing is looking quite good for there to be upheaval in the markets. Of course, it's never going to last forever, and things will always be sorted out eventually, and perhaps people will be surprised. Perhaps there will be someone that wants to tighten, bring back the liquidity. Who knows what's going to happen in terms of the Fed outlook, but more than likely it will be another money printer coming into the Fed. But again, I don't like to gamble on things like that, and always be prepared for a surprise. Priceline.com, it's been making the news on CNBC, saying what a great company it is, and how wonderfully it's run. You look back at the base area in 2001 to 2006, tremendous foundation, great move up, different consolidations with higher volatility, and I would say that sometime in the next couple of months we're going to see a top area here with big distribution, and when I can see it in the newspapers and the online websites now, they're touting Priceline as a stock to buy. And whenever you see that, it's time to sell out. So if you do own Priceline, it's your choice, but I would consider being very cautious and reducing your position to flat the market. Sell out of Priceline while you've got a very decent profit. If indeed you did buy at these low levels, it's time to sell out and not be so greedy. White Rock Minerals, listed in Australia, extreme downtrend since it listed, new company, and it's gone all the way down, and it's broken the downtrend here, but it hasn't broken this downtrend. When it breaks above where my mouse is, if indeed it does, we could see a bit of a long-term head and shoulders base action bottom there, and I expect to see it snaking along here. The reason I uploaded this is because a lot of The people I know that have pensions in Australia are only allowed to buy Australian shares, and their money's tied up in the Australian market. And I think White Rock is quite a good long-term bet for the future. If it doesn't work out with their company, I'm sure their assets will be bought by a larger player. And I can see this company in the next 5 to 6 years doing quite well. This is definitely not a short-term trade, where you can go in and take profits within 3 to 6 months. This may take 3 or 4 years to turn around, but I think it's quite a good company. At the moment, the commodity sector is not doing well. Perhaps in a year or two, once China turns around, we may see the bull market continue in commodities. Telecommunications stock here, listed on the Australian market. I personally believe that this is distribution. It may well indeed have a spike higher from here, but anyone that's long this company at the moment should definitely consider selling out. This looks like the sign of volume, volatility, which equals distribution. Great base action here. We had a tremendous rise in the company, and it's time not to be so greedy and sell out. Again, another Australian listed company in the commodity sector. It's been basing along, big downtrend. It didn't really participate that much in the commodity boom. Who knows? I don't really look into the fundamentals that much, and I'm sure there's good reasons why that was the case, perhaps restructuring. But I can tell from the chart that professional buying has come into the market, and professionals are extremely patient. They're in no rush to move the market up. They'll only move it up once they've secured the number of shares that they need, and they're in no rush to pay their bills either. So this could take another couple of years to take off, but it does look like professional buying coming into the market. And if you're forced to buy Australian shares, I would definitely consider this particular stock. And I believe it's also listed as well in Bermuda and in London as well, alongside Australia. Just another monthly chart here. As you can see, the downtrend line broken, some nice flat action here. Again, it could take a lot longer to take off, but if you're looking for a good value type of trade that you can hold for 4 to 5 years, then this could be the stock. Nice base action back in 2005, and we did see it participate in the early part of the commodity boom. But in terms of the second stage of the commodity boom, gold in 2011 was extremely high, whereas this company didn't participate in that leg of the bull market. So I believe that with the new bull market, if indeed it does start in the next year or two, that this will be one of the companies to be long. Oxford Biomedica, listed in London. Again, downtrend here, broken. Very early stages, big volume action on the downside without moving the market down too much, which is a good sign of that selling being absorbed. Good signs of professional buying. Again, it's too early to be looking to bet the farm on this, even though that would be a bad idea with whatever trade you were looking at. But I would be looking at this perhaps in the next 2 to 3 years to be a very good trade, and it could perhaps take 6 months to a year. But the point of fact is, if it starts curving around in the next couple of months, I will look to start buying in, and I'll look to start buying in more as well as it breaks the 4 mark and the 6 mark as well. And I think this has good potential for the future, but at the moment it is too early. Glencore, the famous Mark Rich, pardoned by Bill Clinton back in the day, was one of the founders of Glencore's, and his generals still run it today, just like Alexander the Great. He had a lot of generals that took over his empire, same as Mark Rich, and you can see here they listed at the perfect time. They got rid of all their shares to the gullible public, and the public bought in heavily. With the commodity boom, this time it's different, and the market steadily sunk to the lows that we see today. Now, I still think this is too early. Perhaps in another 3 or 4 months I could have a lot of confidence buying into this market, but they do own some good assets for the long term. And I think at the moment now, anyone that bought in at these levels that was convinced about the commodity boom has long gone sold out, and especially at these levels as well. So I think these bars here are definitely professional buying coming into the market. So I'd be looking at Glencore for a future markup in the next year, and I'll keep an eye on it and inform you of its progress. Okay, that's it for the stocks today, and I just wanted to show you a few different websites that I looked at last week. This company here, MRI scans, lie detectors, they seem to have cornered the market for this particular segment of the industry, and they do look to have a unique USP compared to other companies as well. Again, it just shows you the way the world's going, and I can see this being implemented in the future in countries like Myanmar, perhaps China, maybe even America or Russia, where companies scan their employees, and you can see it definitely coming about in the next 5 or 10 years. This type of trend will only grow. Red Ice Radio, the actual website's called redicecreations.com. It's Red Ice Radio. I've been listening to them for the last 6 or 7 years, and occasionally has some great interviews. Sterling Seagrave is a very well-respected historian that I've always liked to follow, and this is a great interview with Sterling, and it's worth checking out. Just wanted to show you this. The Uruguayan president lives on a little farm, couple of dogs, seems a very nice guy, a bit of a lefty, and I'm sure that some of his opinions don't make much sense, but a lot of what he says does. And I also just wanted to show you one of the quotes. He said here, most world leaders are having a blind obsession to achieve growth with consumption, as if the contrary would mean the end of the world. And he has just summed that up perfectly. Every time there's a recession, the politicians panic, and they don't let the market play out, and they don't let the weak players die off and the strong players to come about. So he hit the nail on the head, Uruguay's left-wing president, with that particular quote, and he's just summed up a lot of the problems and issues that we see at the moment. And also he's brought in some very good legislation in the last month, and he supports a lot of good ideas as well. It used to be known as the Switzerland of South America for banking. A lot of the rich Brazilians and Argentinians still keep their money there. And it's definitely a country worth checking out. In South America there's only 2 real countries worth investing in, really. It's Chile and Uruguay, and then perhaps Brazil after that. But I definitely like some of the things that the Uruguayan leader's done, and I like his style as well. Just wanted to show you this lava bit, just to show you that there are still some morals in the world. If you read this, the website is lavabit.com. When the guy gets back in business, try and support him. He seems to be a very moralistic person, and I respect his position, and I respect what he's done as well. Check it out anyway. I won't go into the details because, as you say, they're controversial subjects, but it's lavabit.com, and it relates to Snowden and encrypted email services. If anyone wants to look into that a bit more, I find that quite interesting, and I like to keep up to date with what's going on. Just wanted to show you a chart, the shrinking federal deficit, and I just wanted to show you that charts can give you the wrong impression. This here is based from 2009, and you see a nice downward slope here, the deficit becoming better, and that's why obviously the American dollar, the greenback, is doing better on world markets. But if you look at a long-term chart of the budget deficit as a percentage of GDP, it looks like a skyscraper, if you look at it over a 30 or 40 year period. So, always when you're looking at charts, try and look at a selection, a yearly, a weekly, a monthly, to get a full picture of the real situation. Because you could just take a quick look at this and think, wow, this is great. But if you look back in the last 30 years, even where it is now is still, a huge amount higher than where it was back in the day when the Americans ran a good budget and a decent economy. Okay, that's it for today. Over and out, and always check out Oak Trader Report on a Sunday if you're interested in long-term position trading and also in a different opinion and a different mindset to what the mainstream media have. Okay, have yourself a good day, and I'll speak to you soon. Bye now.